In just the last week, the SEC has responded to Coinbase's complaint, as well as sent a letter to Grayscale indicating that Filecoin could be a security. We saw that Visa was experimenting with the Ethereum blockchain, and Tether made an announcement that they're going to start buying Bitcoin. As well as our favorite DeFi project, GMX, has finally announced V2 and it's testing it out. Crypto moves really fast, and every week I'm going to be bringing you the latest updates of macro, DeFi, and NFTs. So welcome back to the Alpha Report, episode 2. Here's everything you missed last week. What's up, YouTube? Welcome back to my channel. I am Crypto with Nick, and we are on episode 2 of the weekly Alpha Report. So be sure to hit that like button and subscribe. Do me a huge favor. Drop a comment below on how you're liking this new series, and let me know about any new projects that I should be researching coming up, but let's get into it. Just taking a quick look at Bitcoin's price action. Last weekend, we saw a pump start to kick off that really carried on through the week. But then you can see here on Thursday, massive candle back down and kind of ended the week really flat when you kind of take a look at things. And a new fun buzzword I'm being hearing thrown around a lot right now is that we have finally entered the bored stage of this market. When prices are going up or down, there can be a lot of euphoria and feelings and excitement. But right now, I don't really think you're going to see a large shift in Bitcoin's price action. Maybe over the next few months, we might just start to range here. And if that happens, what you might also see is people just start to capitulate because they're bored and they really just want to see something happen. But with that in mind, we can of course take a look at Ethereum's price action. I mean, more or less, this is basically flat on the week. So again, nothing too exciting happening here. And of course, finally, just taking a look at the ETH BTC ratio, right? Again, it's been a downtrend for many months. Really hoping to see this break out maybe in the later half of 2023. So I'll be sure to keep an eye on it and updating it weekly. And one of the biggest things to be looking forward to in the next month here is we have FOMC coming up in about 23 days. And if we come here, we can see there's an overwhelming probability chance that the market is factoring in, right? 86% that the Fed is not going to raise rates, right? Coming over here to this tweet, we can see here there is a statement that after raising rates from the Fed for the last 10 straight FOMC meetings, that with the data coming in a few weeks, it might be appropriate to skip a meeting, meaning that the Fed will officially pause and have hit terminal rate. Considering all this, again, it's likely that we could see one more interest rate hikes of 25 basis points, but it is also looking very likely that we're not going to raise interest rates anymore. So just something to keep an eye on, right, as we kind of head into the next month. We'll check back in on this. All right, so diving into this week's market news. If you don't know, about a couple weeks ago, the Coinbase actually sued the SEC. And really what it's looking for here is clarification on what could be considered a security and what does that framework look like. And with that in mind, the SEC has a set amount of time that they're forced to respond in these kinds of matters. And we can see here this is filed in the United States Courts of Appeals, right, for the Third Circuit. Even though crypto has been around for almost a decade, the SEC still refuses to define what is a security when it comes to the cryptocurrency industry. What frameworks and regulations can companies expect so that they can become compliant? Because we can see here in the response that Coinbase would like its policy preferences addressed immediately, does not entitle extraordinary relief on the commission to act, right? And this is just disappointing. It's adding to the story that crypto is not welcomed in the US. And I think it's going to be a grave mistake that they pass up on this trillion-dollar industry and already trillion-dollar asset class. And it goes ahead and goes offshore, leaving the US really behind in this next opportunity of technology era. The SEC's whole model right now is regulation through enforcement, and we can even see here that the SEC asked Grayscale to withdraw the application, insinuating that it could be a security. So it's clear here that the SEC does have a framework on what they evaluate could be a security, and we can see it firsthand here. They just don't want to tell anyone that. It's like when you're filing your taxes and you ask how much I owe, and they're saying, figure it out. Like, well, what if I get the number wrong? It's like, well, then you go to jail. And like, I don't know how they can expect anyone to move forward with this kind of uncertainty. And as you can see, Grayscale holds multiple crypto funds, everything from Bitcoin Cash to Ethereum, Litecoin, and so many more. And we can see here that the SEC has again requested to seek withdrawal of the registration, and that Grayscale does not believe Filecoin is a security and intends to respond promptly to the SEC. So we'll see what happens with Filecoin. The biggest news this week definitely has been the latest announcement from Ledger, who introduced a new product known as Ledger Recover, helping you recover your seed phrase easier. But this has been an absolute PR nightmare with the way that it's been communicated and delivered, and people are starting to genuinely wonder, is their crypto safe using Ledger, and has a backdoor been installed? To give you a quick summary, Ledger Recover's goal is to help onboard the next wave of retail users. What it does is it's a subscription that you can subscribe to. And what it's allowed to do is it takes your seed phrase from your ledger. If you lose it, it goes ahead and splits it up into 3 encrypted shards and sends it to 3 separate companies encrypted in what's known as a hardware security module. Honestly, there couldn't be a more safe and secure way to store a seed phrase than what I just described and what their intended goals are. But that's not the problem. The problem is this: the way that Ledger has always established itself as a company and communicated is that the private keys never leave the secure element chip, stating that it has been third-party certified and that a firmware update cannot extract the private keys no matter what. This whole idea of this new product launching, Ledger Recover, is a firmware update to, again, you would give up your seed phrase to those 3 encrypted shards, right, to have it stored for you, just in case you lose it, so there's a process for you to easily recover it. But this disrupts the core value that everyone was under the impression that this seed phrase could never be exported, right? Because that is the whole intended purpose of these hardware wallets, is that the seed phrase never goes online. That original statement was written back in November of 2022. This statement written this week on May 17th, Ledger support mentioned that it's always been possible for Ledger to write firmware that facilitates key extraction, that you've always trusted Ledger to not deploy malicious firmware whether you knew it or not. And this is really what people were upset at, right? Because people had this notion of that due to the architecture of the hardware wallet that the key could never be extracted under any circumstances. But it seems that is not what entirely they always meant. And I think what they mean by that, to bring it all together, is Ledger Recover is a new service you have to optionally sign up for and install the firmware. I think what's being described here is as long as you do not install new firmware, to date, Ledger cannot extract those keys. But the fact that there's even a chance or possibility that Ledger could extract that seed phrase, of course, has everyone concerned. And even here, we can see from the Ledger co-founder in a Reddit post, it says that technically, if you were to use the Recover subscription, that the government could technically subpoena them to get access to your funds, which is, again, insane to think about coming from a hardware wallet vendor that is supposed to protect your assets. Now, here's my take on this. Every hardware wallet technically has a ton of different flaws. I still believe Ledger is among the best and highly rated, and it's still my favorite, and I don't plan to move my crypto. I will not be going after something like Ledger Recover. And there's still that trust security model where unless you install firmware as a user and you physically tap those buttons to make these actions happen, your crypto should remain perfectly safe. And this problem isn't really unique to Ledger. We can even see here from Grid Plus, who makes the Lattice wallet, they make the same statement that hypothetically we could induce a firmware that would allow the private key to export, but we just won't. In the end, Ledger Recover is the future to onboard the next wave of users, right? We cannot ensure that users will be able to safely custody their assets. Imagine you told 1 million people that if they forgot their bank account password, all their money would be gone, right? And that happens every single day. So even though I believe this is the path forward, I thought it was terrible execution, marketing, and communication from Ledger. Even though I won't personally be going with this new subscription service, I do believe it is the right move. I hope they're able to make it out of this. We'll see what happens. And in other news, Celsius, the now bankrupt DeFi lender, went ahead and finally was able to issue their 428,000 worth of staked ETH withdrawal from Lido now that withdrawals were open. You can of course see this massive spike of when they issued their withdrawals. I'm sure this is going to help with the formal bankruptcy proceedings. As I learn more about this, I'll be sure to share it in future works. Something else that's pretty cool that's happening is last week I shared that Tether had an enormous amount of surplus and profit. Looks like they're going to start allocating 15% of that profit towards purchasing Bitcoin, so pretty good. And we're seeing Visa continue to invest in crypto by testing account abstraction. The whole goal here is simplifying the user interaction so that users don't have to hold native ETH, right, by abstracting those complexities away. And you can kind of dive into the full report if it's something you're interested about. Let's switch topics and do a quick rapid fire on what's happening with Memecoin season. Ever since the listing of Pepe on Binance has pretty much marked the top, but recently they did partner with Layer 0 Labs to take Pepe fully cross-chain. And we are also starting to see some other meme coins gain tractions, one like Grumpy Cat and the Nyan Kitten, But what you can see here is honestly kind of first of its kind, where people are being sent cease and desist letters on chain to those creator wallets. Both Grumpy Cat and Nyan, of course, have both full control of their IP, and if the brand's being used a way that they don't approve of, there has been full extent of the law to request takedowns and even sue for damages. And probably one of the most exciting meme coins to kick off this week has been Refund, really a play on words. As I talked about last week, PsyOps presale, which raised over $7 million, was a complete nightmare. So this was actually created by a whale named Blur. You can check it out. He has this CryptoPunk and an on-chain net worth of over 23 million. And the only reason I'm kind of mentioning it here is it's also gained a 40 million market cap, honestly, in just a few days. So I threw a couple bucks in. I'm not going to show you on this. Do your own research. Let's move on. Kicking off the DeFi news with the latest protocol updates, we can see here the Curve USD stablecoin pools are finally live in the UI. You can see here it has a little bit of about 10 million in TVL, but I would expect this to increase significantly as they continue to roll this out, right? Everyone has been waiting for this for a long time, and I'm sure a ton of people are excited to get going. And finally, one of my favorite projects in all of DeFi, GMXv2 testnet, is finally available over on the Avalanche testnet. If you come here, you're going to notice things look very similar, but one of the biggest differences here is that GLP is no longer, right? Now, they will maintain GMXv1 for quite an extended amount of time, I've been told, but GMXv2 does not use the concept of GLP. Instead, what they have is more of kind of fragmented liquidity, and they have pairs. So what you would do is you provide liquidity for each of these different pairs. And again, it would be the same story where you would be the counter trader kind of taking in traders' profits or losses. Tano here, who is a mod for GMX, kind of outlines some of the different aspects that you can expect in V2. It's going to be new markets, auto deleveraging, different changes in fees and pricings, oracles, spot trading, and orders. I'm going to make a full video diving into GMXv2, but to kind of give you a quick video, you can see here in the market section, it's going to consist of this index token here, a long collateral token, and then a short stablecoin token. The biggest thing here is that liquidity providers earn trading fees on the liquidity pools that they contribute to, which is great because it's going to allow GMX to list a ton of more assets. And you also, as a user, don't have to be exposed to assets maybe you're bullish on or you don't think are safe enough, and so on. And so it's going to allow each market structure to potentially have its own fees that you can accumulate. In other news, we can see Compound, which is also a money market similar to that of Aave, has finally expanded to Arbitrum. And I think the coolest thing here, though, is that they are going to accept the token ARB as collateral as well as GMX. And with a few weeks ago, all the DAOs on Arbitrum received their token allocation. You can see here Radiant Capital kind of laid out a plan of what it intends to use its airdrop for. If you aren't familiar with Radiant Capital, it's a omni-chain money market deployed on Arbitrum and Binance, kind of powered by Layer 0 Labs under the hood. And it'll let you essentially deposit collateral on one blockchain and borrow on another is the whole point. You can see here that out of the 3 million ARB tokens granted to the treasury, what they plan to do is 40% of that will be airdropped to new 6-month and 1-month DLP lockers, 30% distributed to other DLP lockers, as well as 30% strategic fund for the DAO to use, right? Which would make perfect sense. And in last week, we were also talking about how everyone was forking Uniswap v3 now that the license has expired and Balancer concentrated liquidity is finally live. I love the Balancer application. It's definitely a blue chip out there, so pretty cool to see. Sticking with Balancer, you can see they've also partnered with Layer 0 Labs, and this is awesome because you're going to be able to take your vote escrow bound position and go ahead and boost pools on different layer 2. So super awesome to see them expand like that. Coming over here to Level Finance, which is a decentralized perpetual exchange, much like GMX, but kind of puts a spin on things on this idea of tranches, so that way you can limit or increase your exposure to the counterparty. But you can see here they had a vote proposal to expand, and it looks like they're coming over here to Arbitrum. So be on the lookout for that. Trader Joe, which is also a decentralized exchange available on Arbitrum, Binance, as well as Avalanche, has now introduced SJoe on Arbitrum. This is what's going to allow you to stake your Joe and earn protocol fees. So really great to see them continues to pay out real yield, right? Moving beyond this era of just farm tokens. GMD Protocol, another Arbitrum product, has also outlined what they plan to do with their DAO airdrop. You can see here 300,000 of it is going to be a TVL increase campaign, as well as 86,000 for a locking incentivization. If you don't know GMD Protocol, it's this concept of pseudo delta neutral vaults. You can stake your USDC, ETH, or Bitcoin and earn about 15% APY. We also have Gas, a new project live on Arbitrum that launched from that GMD launchpad. They are also a lending market using delta neutral vaults to boost your GLP, which comes from the GMX side. So definitely go ahead and take a look at it. I've been excited for this one, so happy to see it finally launched. We also have Equilibria announcing their IDO plan this week, so make sure to pay attention. They are a yield booster for Pendle Finance, which is one of my favorite projects. I think if we scroll down here a bit, you can again look at the token allocation as well as the raising cap, right? So it looks like they're going to start at around 10 cents, which will be a 10 million FTV. And they have a hard cap, which is awesome to see, around 20 cents, which again is going to be around a 20 million FTV. And I like, again, that they are putting a hard cap on this fundraising, only looking to raise 1.5 million. If we scroll down here, we can see the whitelist is going to be May 22nd, but the public sale, you'll get a chance May 23rd. So be on the lookout for that. Mark your calendars. And this week, Optimism have finally announced that they are going to have the Bedrock update here on June 6th. You can expect 2 to 4 hours of downtime, so be sure to mark your calendar. This is going to be an overall protocol update. You're going to see decreased fees as well as a ton of other things, so if you can always check it out if you want to learn more. Now let's dive into this next section. I wanted to create a small little section here for LSD Finance. And so kicking it off with this recent proposal filed by a community member for Lido tokens. Lido by far is the #1 liquid staking provider, having over 30% of all Ethereum that is staked through the Lido service. And people have always had a bit of a problem with the tokenomics of Lido, because Lido didn't receive any kind of revenue or anything like that from the project. It was simply kind of just this idea of this like worthless governance token. And the basic TLDR of this proposal, as we can see here, is it introduces a staking module for a buyback program, so buying back the Lido tokens from the market, as well as allowing users to stake to earn a portion of the protocol's revenue, which has really been a hot topic for Lido for such a long time. Now, I don't expect a proposal like this to pass, to be honest, but I love people are bringing it up right to the doorsteps of the forum and having these conversations, because I think this is eventually going to be the path down the road that Lido is going to have their hand forced and start sharing this revenue, which I think is only fair. We also have here Stakewise is finally announcing some updates with their V3. We can see here, if we scroll down over the past 2 weeks, they completed 95% of the smart contract work, right? They have the OS ETH UI deployed, the backend components going on, right? So I think we're getting closer and closer to the launch here of V3. V3 is a complete protocol overhaul. There's a ton of updates here. Here's a quick diagram that you can kind of pause and look through, but definitely recommend kind of diving into this official announcement that they posted back on their Medium to kind of familiarize yourself, as I think it'd be pretty cool. One of the biggest updates is going to be the vault, which you can see here is going to allow an open marketplace of node operators for stakers to choose from, right? So you can delegate your ETH to solo stakers, stake with larger entities, or anywhere in between. Another project here is Unsheath, which went ahead and launched on Arbitrum and is partnered with Stargate. It's an LSD aggregator allowing you to deposit your LSDs and mint Unsheath. There's honestly some pretty awesome farming opportunities out here, so definitely run checking out if you have some ETH you're looking to put to work. And finally here, there is a new proposal over on the Frax Finance governance for a new protocol known as Prism Finance. You can see here what their goal is to take liquid staking derivatives and go ahead and allow users to mint a stablecoin and then incentivize it with the Curve Convex governance token of Prisma. And you can see here, this proposal was more or less to work with Frax Finance in some capacity by going ahead and asking for a $100,000 investment and in return receiving 1 million Prisma. And here's some rapid fire NFT drama, and I don't follow this world too closely, but we have Nana here kind of predicting the future, putting a tweet yesterday, May 21st, notice that. Wonder how that guy is doing who refuses to talk to anyone with less than $100,000 PFP. If you don't know, we had this Bored Ape holder, extremely delusional in the bull run, who insulted a ton of people by basically saying, if you have a PFP less than $100,000, don't at me, and if you don't have this kind of money, you need to just be working harder. But the craziest story is this user actually got their Bored Ape stolen from them today, but looks like they were able to pay $100,000 to get their ape back. And why I would never celebrate anyone getting scammed out of their Bored Ape, and this person has apologized for those very ignorant comments that they had made in the past, but kind of just shows you what's happening over here in the Bored Ape community. On the other news here, we have Hyperspace, which is the new NFT marketplace, is lies on the Sui network, so go check it out. If you come in here, it looks pretty much just like any other NFT marketplace, right? So I'm sure you can navigate this quite easily and kind of look at different collections that are launching up and coming on this new blockchain ecosystem. And that's a wrap. So of course, always drop a comment below, hit that like button, subscribe. Go ahead and follow me on Twitter, DM me if you have any questions, or again, come join the completely free community Discord. Hope to see you in the next one. Cheers and happy farming.